Another trading week begins and Global Business is all ready to bring you the latest developments in the business world. From Nairobi to Cairo, from Johannesburg to Lagos, we'll be bringing you entrepreneurs that are making business headlines. I am Penina Karibe live in the Kenyan capital, Nairobi. It is 9 p.m. here in East Africa, and wherever you're joining us from, welcome to the show. Coming up tonight, betting on quality, Egypt holds tour operator licensing to enforce improved standards. No more frequencies, South Africa sticks to its guns on row with Emirates Airlines. Plus, from takeoff to takeout, we feature an Ethiopian dining experience from a grounded Boeing. Let's begin in Egypt, which has stopped the issuance of tourism licenses temporarily, favoring instead to ensure that service delivery of licensed operators meets the highest standards possible. The announcement by Tourism Minister Hisham Zazu came as a surprise, considering that the country had been trying to revive an industry badly hit after the 2011 unrest. Tourism is a major contributor to Egypt's foreign currency inflow. CCTV's Yasser Hakim has more details.
This is not the first time the government stops issuing new licenses for tourism companies. With nearly 2,400 companies operating in the market, there is need for regulations and monitoring to ensure high standard of quality is provided to clients.
What we want now is to rebuild our quality. Competitive price is not everything. We have the proper infrastructure, more than 25 hotel rooms, and good transportation links. We have to have well-trained employees and high-standard services provided by the operating companies.
Tourism saw a huge plunge after the 2011 unrest. Being a major source of foreign currency, governments worked hard to attract tourists back. For instance, Egypt is targeting 1 million UK tourists this year, up from 850,000 in 2013. Total inbound tourists reached 9.5 million in 2013. That's 2 million less than 2012 and nearly 5 million lower than the pre-2011 numbers. But there are positive signs.
Tourists from Gulf countries increased by 300%. That's due to incentive campaigning from our side. Also, Russian tourists are back to their normal levels. We had 2.5 million from Russia alone, thanks to Turkish travel agents who control the Russian market.
But that's not enough. Egypt is looking at other destinations to bring even more tourists.
Definitely, China has a very good position regarding Egypt and Egyptians. And the solid relationship between China and Egypt is very clear and very well considered. Again, we feel more comfortable dealing with China than dealing with other countries because there are many common things considered Oriental from our point of view.
Tourist inflow from China is a low 50,000. The government established direct flights from China targeting 500,000 Chinese tourists after 3 years. Tourist inflow has been on the rise for the past few months, but experts say there's still a lot of work to be done, especially on security issues and marketing the country so that it returns to the normal levels before the 2011 uprisings. Yasser Hakim for CCTV, Cairo.
And from the north to the south of the continent, the battle over a commercial route continues in South Africa as the country's Department of Transport insists that UAE operator Emirates cannot introduce a fourth flight into the country. The airline went to the court several weeks ago to allow it to introduce that extra flight. However, the Department of Transport says that the agreement under which Emirates could introduce the extra flight is outdated. The clash centers on a government move to negotiate or renegotiate an 8-year-old agreement with the UAE for Emirates Airlines to operate 49 weekly flights in and out of South Africa. The early agreement was done to accommodate a growing demand over the 2010 World Cup. The dispute now threatens to leave thousands at risk of being stranded if the government carries out a threat to stop Emirates from landing in South Africa.
The fact that what we agreed on in 2007 was that this is proviso for the FIFA World Cup 2010. That's what the agreement provides. So the fact that there is a new frequency being added when we still have outstanding issues to resolve became a problem with this. And also the fact that it was not approved at an appropriate level. And that's why we wanted to stop this so that we can get them on the table so that we can discuss this matter.
All right, so let's get more now from Angelo Coppola, who is live in Johannesburg. Angelo, just bring us up to speed on where the talks are between Emirates Airline and the South African government.
Well, as of a few hours ago, there had been no ministerial meeting, which is what was threatened on Friday. There has been an exchange of letters between the Department of Transport in South Africa and the UAE Ministry. And then we heard on Sunday that talks were ongoing. Now we're hearing that the Transport Minister has instructed her Director General or Deputy Director General to get onto an aeroplane, obviously not an Emirates aeroplane, and fly to the UAE to have talks with officials there. So we're going to have to wait and hear if a meeting actually takes place and if there's any kind of agreement. Emirates earlier issued a terse statement saying that they don't comment on government discussions. Penina?
So, Angelo, what is the idea behind the move by the Department of Transport to stop Emirates Airlines from increasing frequencies?
Well, the Department of Transport, as you heard just now, say that there's an Emirates bilateral air services agreement that relates back to the 2010 FIFA World Cup. And the DOT, or Department of Transport, have been trying, they say, to have a discussion with the UAE. In fact, they claim that they met with the UAE management in Durban late last year, but didn't resolve anything. But in the meantime, Emirates then applied for a disputed fourth flight, and they got it. The problem here is that the Department of Transport are saying that the official who signed the approval wasn't authorized to do so. It's then that the DOT stepped in and tried to cancel the approval. Emirates went to court and they got permission to fly, and that's where we're standing right now. Penina?
But Angelo, considering the state of South Africa's economy, I mean, wouldn't this be a good time to encourage more flights and more visitors?
Well, you would have thought so, wouldn't you? But this isn't the first time that it appears that the left hand doesn't quite know what the right hand is doing, and also doesn't understand the unintended consequences of a lack of communication between government departments and the lack of synchronization. You just have to think back to the furor over the new visa regulations that the Department of Home Affairs tried to introduce a couple of months ago without considering the impacts on the tourist. So a part of the restrictions obviously have since been postponed, and we're hoping that some sense or sensibility does return to the discussion and the UAE flights continue and some agreement is reached. Penina?
So does the move to stop Emirates from adding flights have anything to do with the turbulence at South African Airways?
Well, you see, it's unclear at the moment, although the Director General I spoke to told me recently that it has nothing to do with the troubled state airline. You'll recall that that airline is currently trying to get some more bailout money from the state. We do know that SAA has big plans to increase its market share locally and internationally, and this could probably include increasing flights into the rest of Africa and perhaps beyond. At the moment, of course, they don't fly into Dubai, but who knows, that might all change soon. Penina?
All right, Angelo, thanks very much for those insights. That's Angelo Coppola live for us in Johannesburg. Well, let's just stay in South Africa. And earlier this year, the country's president, Jacob Zuma, announced a new ministry in his cabinet to help tackle his country's massive unemployment problem. The Small Business Ministry has been tasked with growing the small and medium business sector and supporting entrepreneurs to help create jobs. Sumitra Naidu caught up with the new minister, Lindiwe Zulu, to find out what progress has been made thus far.
The target is 11 million jobs over the next 15 years. A tall order for the new minister, who's expected to drive the initiative. South Africa's unemployment rate has hovered around 25% for the last 15 years. With a weak economy, the target is unlikely to be reached.
We need economic growth of around 5% a year to decisively reduce unemployment and poverty and to transform our social and economic order.
So how does the new minister plan to change this?
Those that are currently doing very well, we need to do everything we can to make sure that they don't collapse. And those that are in the middle, we need to see what are the things that they need in terms of support and learning also from those that are successful. The third one is about those that are just entering, to make sure that those that are entering, we change the pattern of new businesses collapsing within the first few years of their existence.
Zulu says her department is trying to ascertain the state of the small and medium enterprises industry through proper research. They are also working closely with big business and other government departments to determine how the sector can be boosted.
If you go into an area where there are roads in the township that have got potholes, who must fill up those potholes? If we get small and medium enterprise, small enterprises for instance, to be the one that get the opportunity to fill up those potholes, it means the money is going to be circulating in the township, firstly. Secondly, it means there's more people in the township who are going to be employed directly.
The new minister is determined to work around South Africa's highly unskilled labour force. Zulu wants to find entrepreneurs and support them.
A simple example, you find that women who are sitting somewhere in a rural area and producing the most beautiful beads that you can think of, they don't know how to move from where they are making it to the market where they have to sell it. Then they've got somebody who's smarter, who comes and buys it at 200 rands. If it's 200 rands, comes to Johannesburg and sells it for 900 rands.
South Africa's high unemployment rate is placing a huge strain on the economy and the social grant system. Job creation needs to happen urgently. It's been 9 months now since the Small Business Ministry was formed, but there's been no real change as yet. Sumitra Nadu, CCTV, Johannesburg.
Nigerian Finance Minister Ngozi Okonjo-Iweala has proposed lowering the assumed benchmark oil price for the country's 2015 budget to around $73 per barrel from the $78 proposed in September. This is due to the recent sharp fall in global crude prices. Ngozi says falling oil prices would impact Africa's largest economy and top oil producer, requiring the government to cut non-essential spending and raise more revenues elsewhere. Brent crude prices, the index against which Nigeria's oil is priced, has fallen more than 30% since July this year. Nigeria depends on crude exports for over 70% of government revenues. The fall has triggered a sell-off in Nigeria's bond and stock markets, hurting the local naira currency, which is down almost 8% this year. And in Zimbabwe, the government has temporarily shut down around 11 small-scale gold mines for allegedly flouting mining and marketing procedures. Mines Minister Walter Chithakwa said following the compliance monitoring and enforcement operations conducted by the Reserve Bank, a number of small-scale gold producers were found to be non-compliant. Some of the alleged cases include failure to keep mining records and engaging in illegal gold sales. Chithakwa said these suspensions would only be lifted after the mines fully comply with investigations. Zimbabwe's gold sector has been facing viability challenges over the years, resulting in production dropping from a peak of 27 tons in 1999 to 4 tons in 2008, before it peaked to 14 tons last year thanks to government reforms. Kenya has won the bid to host the Association of Tourism World Congress in 2015. The country plans to take advantage of the event and use it to showcase the country as the best tourism destination in the world. Kenyan Tourism Cabinet Secretary Phyllis Kandia says the event is among a number of key international conferences which will bring together close to 500 delegates from over 20 countries across the globe. The East African nation has stepped up its efforts to woo key source markets in the wake of rising insecurity following attacks by Islamist militant group Al-Shabaab and travel advisories. Kenya has also launched a social media campaign in conjunction with the private sector to boost tourism numbers. The country will also host another tourism conference, SKAL International Congress, next year in Mombasa. All right, to the markets now. And Egypt's EGX fell in early trade on Monday as it saw a broad sell-off against a weak global background. The EGX edged down 0.3% as investment bank EFG Hams fell 2% and Commercial International Bank lost 0.2%. By end of business today, the EGX closed at 9,122.33. Still ahead, blazing the trail, the DRC does it again, this time with a locally manufactured smartphone. And Hong Kong and Shanghai investors to buy and sell on each other's bourse as a stock trading link is launched.
security is a major challenge for most African nations, yet agriculture is a backbone of these economies. But with technologies like hydroponics, there is hope of food availability all year round.
You're watching Global Biz. Welcome back. The Democratic Republic of Congo's newly launched smartphone is set to take the Congolese phone market by storm. The Elika L models maker Veron Manku says he has plans of selling the device in neighboring countries after it peaks in his country.
After launching a tablet in the year 2011 and a smartphone in the year 2012, Congolese tech innovator Veron Manku is at it again. This time he's credited with launching the very first indigenous smartphone in the Democratic Republic of the Congo. The Elika L smartphone has customized features for locals and follows recent market trends in the smartphone industry.
Our first smartphone was named Elikia, and we wanted to turn this mark into a range of products. We will have different types in several sizes to allow us to reach many customers. L stands for large. This version is indeed larger than the previous model, but size is not the only difference between those two smartphones. This new version is more powerful, with more autonomy, and it offers more utilities. We use the latest Android OS. Globally, we are offering a better phone for 2014 to 2015.
Manku aims to have the phone readily available in Africa and make it the most affordable, retailing at just $121.
It will be the most affordable smartphone in the Congolese market, and we will not limit ourselves to Congo, since we plan to extend ourselves to Ivory Coast, where we hope our phone will be accessible to large numbers of people.
We have led market surveys and polls, and it taught us that this price of €98 is psychologically acceptable to the consumers. We think that the average Congolese buyer can afford it, taking into account the minimum salary level. We think that the Congolese worker or student can buy one.
According to a report by BizTech Africa, about 25% of cell phone users in the Democratic Republic of Congo use smartphones, proving there is still an untapped market for the devices. Pitok about CCTV.
A landmark stock trading link program allowing Hong Kong and Shanghai investors to buy and sell on each other's bourse has officially been launched. This marks the start of one of China's most significant moves to further open its capital markets. CCTV's Kathy Young has more.
Shanghai Hong Kong Stock Connect has begun.
Finally online. After a 3-week delay, the landmark Stock Connect scheme is now a reality. From today, investors are able to trade stocks freely between Shanghai and Hong Kong, a move described as a milestone in global capital markets.
This is a scheme of historic significance to both Hong Kong and mainland stock markets. With the launch of Stock Connect, institutional and retail investors in Hong Kong and from overseas will be able to invest directly.
Given the situation where China is not fully convertible on the capital account, it creates a new mode for convenient cross-border equity investment with risk controls.
Here at First Shanghai Holdings, one of over 90 brokers in Hong Kong taking part in the link, the first hours turned out without hitches, says Executive Director Elliot Lee. Brokers had earlier expressed concern about a potential crunch on day one, saying many investors could struggle to get their orders filled.
The launch of the Stock Connect scheme creates the world's third biggest equity market. It would also have created a big arbitrage opportunity between Shanghai and Hong Kong. But that's all gone now. The discount between the A shares and H shares has disappeared, mostly because of Shanghai's strong performance. The opportunity now has moved beyond just short-term, momentum-driven investing.
I think more capital would be going into Shanghai relative to Hong Kong, even though some of the mainland capital could move out this way as well. With the Connect program opening, you actually suddenly, for outside investors, you're getting access to 560 plus stocks.
Today's launch has yet to attract asset managers and brokers, which have earlier said they'll wait until the first few days of trading before taking part to see how the whole link-up works out. Kathy Yang, CCTV, Hong Kong.
A quick check of the commodities, and Brent crude fell more than $1 to near $78 a barrel on Monday, following news that Japan, which is the world's fourth biggest crude importer, had slipped into recession, and after comments from the West's energy watchdog that a return to high oil prices was unlikely soon. Still ahead on Global Biz, from takeoff to takeout, we feature an Ethiopian dining experience from a grounded Boeing. Welcome back to Global Business. Now, for something to excite your taste buds, an Ethiopian entrepreneur has set up, well, a different kind of restaurant in the capital, Addis Ababa. The eatery is different in the sense that it was once a plane, but after it served its time in the skies, Gutama Guta bought it and transformed it to an eatery. CCTV's Groom Chala was at the restaurant and he filed this report.
This is an old Boeing 737 aircraft. In its glory days, it has crossed the world's biggest oceans and continents, transporting tens of thousands of passengers. Even after years of flying, it hasn't stopped delivering service. This time, it's a different one, a restaurant. It is a bizarre restaurant with a capacity of 60 diners at a time. No passports and visas required here. And the plain restaurant is already sensational across Ethiopia.
I never thought a plane can be a restaurant. It was only used for transportation, not for dining. But I'm so excited to be here.
It is not only because of the plane that we're excited. This place had no recreational center. Therefore, the investment itself is groundbreaking for the people here. And then for some people who do not know a plane, it's equally important to come here.
This whole establishment, including the plain restaurant, has $1.5 million price tag. The features of the plane are kept as they are, except few adjustments. The chairs, the luggage compartments, and even the toilets are as new as they used to be. However, the cockpit has seen a transformation from a flight controlling unit by the pilots to a DJ booth. This is going to be absolutely a different experience. Dining in a plane, which is a restaurant, not on the skies, but on the ground. Let's just try to taste the food. Here with me is the owner of the spectacular restaurant itself, Gutama. I'm going to ask him what really, motivated him to start this business here in Burayu.
ረጅም ነው ስፋትም አለው እንትኑ ራሱ ከ4 ሜትር በላይ ነው
I wanted to do something new, something that makes me happy as well. When we first brought the plane, it was long and wide. Even its wings were 14 meters long, so it was really tough to re-establish it here. But finally, we managed to open a restaurant on a plane.
Ethiopian Airlines is now becoming an important regional transport provider, and Bole International Airport, a transport hub. Gutama hopes this place will be another national flag carrier in the hotel and tourism sector.
This business is directly related to hotel and tourism, and I hope the establishment attracts very many tourists. It's also an alternative recreational center for my fellow citizens. I have planned to convert the place into a fully fledged resort.
For millions who never got the chance to board or even see a plane before, this restaurant plane will be a permanent reminder that they too can make their dreams come true one day. Krumtala CCTV, Burayu, Ethiopia.
Should be quite an experience. Right, so with Christmas around the corner, thousands of people flocked to London's Regent Street shopping district to see the iconic London Christmas light display. Members of the British boy band Take That turned on the light display, surrounded by cheering fans. A large firework display lit up the sky overlooking Regent Street and was followed by music performances. Boy band Union J were among the performers. British pop star and former member of girl band Spice Girls, Emma Banton, also took part in the ceremony. Regent Street is a major shopping destination for Londoners and tourists. It is owned by the Crown Estate, which manages the Monarch's property holdings and is one of Britain's biggest landlords. Okay, so before we wrap up, let's have a look at the currencies now. Nigeria's Naira closed at a new low of 173.20 against the dollar on Monday. That's down 1.21% in volatile trades, despite the central bank's intervention to prop up the currency. The regulator asked lenders to bid for $2 million each in a move to shore up the local currency, but commercial banks avoided the forex auction as the central bank was restricting the resale margins to curb speculation. So on Global Business tomorrow, new South African Reserve Bank Governor Lesetja Kganyago chairs his first monetary policy meeting. We'll be sampling some expectations. And we'll also be sampling one of the top 100 unforgettable experiences in the world as listed by Kenya Air's in-flight magazine, Kampala's Border Border Tour and the person behind them. Well, that's it for this edition of Global Business. Remember, you can send your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I'm Penina Karibe. Thanks for watching.